Hello and Assalamualaikum. My name is Haikal. So today we will share about export credit insurance. Export credit insurance, or we can call ECI, or credit insurance policy, and a risk management product offered by private insurance companies and governmental export credit agencies to business entities to protect their account receivable from loss due to credit risks such as protected default, insolvency, or bankruptcy. ECI covers a lot of commercial risks and certain political risks such as war, terrorism, riots, and revolution. In our country, we have Malaysia Export Credit Insurance, or we can call MECIB, which is now absorbed into Export-Import Bank of Malaysia, or we can call Exim Bank, to provide those facilities under Malaysia's government. Exim Bank was incorporated on 29 August 1995, which is fully owned by the Government of Malaysia under Ministry of Finance. Exim Bank's role is to provide credit facilities to finance and support export and import of goods, services, and overseas projects, as well as the provision of credit, political risk insurance, and financing guarantee facilities. Function of Exim Bank. First, to promote and develop Malaysia export by protecting exporters against commercial risks up to 90% and non-commercial risks up to 95%, and also to assist them in obtaining export financing from the banks. Second, encourage exporters to diverse their export markets without fear of the risk inherent in dealing with new buyers. Third, promote active participation from the commercial banks and other financial institutions in export financing and the mobilization of funds for export purposes. Fourth, providing insurance policies for domestic trades.
Thank you to Haikal. I will continue the presentation. So I will explain about the type facilities offered by Exim Bank. So there are two major group of facilities offered by Exim Bank, which are: first is banking facilities, that consists of conventional banking facilities and Islamic banking facilities, and the next one is credit insurance facilities. Credit insurance is an insurance policy that cover non-payment resulting from debt, delivery of goods or service due to commercial and political risk. The insurance is purchased by business entities to ensure their account receivable from loss due to insolvency of the overseas buyer. Exim Bank also offer both short-term and medium long-term credit insurance. The first one is short-term credit insurance that coverage up to a maximum of 1 year. So it's content of comprehensive policy. The comprehensive policy, also known as exported straight credit insurance, and it provides an umbrella cover for exporters who make regular export to overseas importer on credit up to 180 days. The policy also covers export directly from the supplier countries to their destination without passing through Malaysia, the third country export. There are three variations to the policy. The first one is multi-currency trade financing scheme that protect Malaysian participating financial institution from risk of non-payment by their customer and non-honoring of unirrevocable letter of credit by the overseas letter credit issuing bank. And the second one is bank letter of credit policy that assists in securing payment of unirrevocable letter of credit to your bank. And the last one is indirect exporters financing scheme that protect participating financial institution from risk of insolvency of a direct exporters and payment default of a direct exporter. So now I will explain about the medium or long-term credit insurance that coverage up to maximum of 15 years. So it contains of specific policy that protect Malaysian contractor and manufacturer who undertake project against payment default by a contract holder or unissuing bank for a standby letter of credit. So the next one is also contain overseas investment insurance that protect your investment and consequently your profit. And next one is buyer credit guarantee. They facilitate an overseas buyer in securing a long-term financing. And the last one is they also contain of bond risk insurance. They protect a contractor who is required to provide any surety bond to its contract when undertaking an overseas project. So I will pass this presentation to AIDIL.
Assalamualaikum and hi, my name is Muhammad AIDIL bin Haris. Risk covered by Malaysian Export Credit Insurance. The policy does not cover all risks involved in the export transaction or the exporter's on default or his failure to commit with the terms and conditions of the policy. Some risks that covered divided into two. The first one, commercial. Buyer's insolvency, buyer's payment defaults, and buyer's failure to accept goods. And the second one is economic and political, which is number one, blockage or delay in the transfer of payment. The second one, imposition of an import license. And the last one is war of natural disaster between buyers and sellers' country. In this case, Malaysia Export Credit Insurance will take legal action against the buyers in foreign country to recover the loss. Next, risk not covered, which is number one, non-payment arising from disputes over the non-fulfillment of the terms of contract. Next, risk which can be insured or not normally insurable by commercial insurer, such as marine and fire. The last one is failure of buyers to obtain import license or release foreign exchange to pay for the goods because of some regulation in the buyer's country on or before shipment of goods. Benefit of taking insurance coverage. First, exporters can compete on equal terms with the overseas competitors. Malaysia Export Credit Insurance assumes up to 90% of total risk and thus enables exporters to extend credit to foreign buyers and to venture into the new market with confidence. And the last one, reduce the element of risk in granting credit to overseas buyer. Malaysia Export Credit Insurance provide an independent and true credit investigation and financial standing of the buyer.
That's all from us. Thank you for watching. Have a nice day.